Welcome to the weekly markets update. I'm Maritza Garishvili, investment consultant at Kemak Retirement Group. Today, we are recapping what moved the markets during the week from July 6th to July 10th. This week, stock prices found it challenging to push higher as concerns about economic outlook, reopening rollbacks, and a warning of impending layoffs are beginning to undermine the hopes of a V-shaped recovery. However, the markets climbed a wall of worry, finishing the week with a gain of 1.8%. helped by encouraging news that Gilead's Remdesivir is proving to be an effective coronavirus treatment. Divergent trends within equity sectors continue. Sector leadership remains concentrated in information technology and consumer discretionary stocks with double-digit gains this year. On the flip side, financials and energy stocks lagged considerably, delivering double-digit losses on a year-to-date basis. Second quarter earnings reports will start being released next week. With so many companies failing to provide guidance during the height of the pandemic, this quarter's reports are bound to take more increased prominence. Analysts will be looking for confirmation that earnings will substantially recover over the next 12 to 18 months to justify their current valuations. Dividend payments declined $42.5 billion in the second quarter compared to a year ago. This marks the biggest dividend reduction since the first quarter of 2009 during the Great Recession. Bond yields also broke lower as demand for safe haven treasuries continues. The 10-year Treasury yield fell to the intra-week low to 57 basis points, its lowest level since late April, before slightly rebounding at the end of the week to 64 basis points. Over the last few months, there has been increased discussion in the markets about possibility that Federal Reserve might implement yield curve controls. However, the minutes from the Federal Reserve's recent policy meeting revealed that policymakers were skeptical about its effectiveness. Another 1.3 million Americans filed for unemployment benefits this week. This week's report highlighted that nearly 33 million Americans, which equates to roughly 20% of the labor force, are currently collecting unemployment benefits. To put this staggering number into perspective, there were only 1.6 million people claiming financial assistance a year ago. Strong second half recovery is looking less certain, with rising hot spots around the country, particularly in the southern states, is causing many states to either halt their reopening or reimpose restrictions. While the market has not been spooked by the news, some economies are starting to reduce their growth outlook in the second half of the year. Bankruptcies also continue to rise at a relentless pace. Hundreds of corporate entities have filed for bankruptcy protection. While the focus has been on a big household names such as Hertz, JCPenney, and most recently Brooks Brothers, there's an overwhelming number of small and medium-sized companies that are shuttering at a rapid pace. These trends are troublesome, particularly given small businesses tend to be the main driver of employment growth. Thank you for watching. For more questions, please visit our website, kemakretirement.com.